Hello, this is the CEO of Weisenbach Investments. I haven't done a market review for a while, so I'm decided to do one for you guys. I'm just going to take a look at the S&P 500. So the S&P 500 has rallied for whatever the reasons, QE3, so on and so on, doesn't matter. But what really does matter for me right now is this correction pattern right here. And I'll show you. This correction pattern, we have a V and then we continue to the downside. That's a classic correction pattern for the S&P. I got long the S&P through a small options trade right around here, this general zone. And I now think that the S&P is going to continue its downside movement, and it's more thinking economic terms wise, more general economics, not the jobs numbers. It's not worrying about it. It's just worrying about what's kind of really going on. And what's going on is that we're in a terrible economic situation. Europe is miserable, and U.S. economics are lax besides the great unemployment numbers that came out. So I'm kind of bearish now on the S&P, and I'm going to get rid of my call position and probably change it into a put position. Or maybe possibly a bear put spread. But anyway. Next, I want to look at some technology companies, specifically Apple, Intel, and Netflix. So to me, if you look at an hourly chart, Apple's starting to recover a bit. We might see a little bit of a rally just as a recovery. Every stock has them. And then with Intel, we are probably going to see a recovery. And then with Netflix, we'll see a recovery. I believe we're seeing a recovery with Dell. We'll probably see more of a recovery. From all these stocks that have been pounded. So overall, I would like to be long the technology sector, probably through some sort of ETF. Next, I also want to probably continue to be short the financial sector. And here, JP Morgan looks like it may go up. So I'm probably will buy puts, if anything, on Tuesday or Wednesday on JP Morgan or Citigroup. And then Wells Fargo, we may also see a recovery with Wells Fargo, but I think Wells Fargo probably will continue to be sold off like it already is being sold off. So next here, I want to look at the bond market. And we've had a W formation. And what's likely to happen, by my standards, is that I'm going to start getting long bonds, because what's going to happen is it's probably going to come up in this range here, break our levels, and continue upside till at least here. If it breaks this 151 area, we might probably even rally to 153. If we break 153, we'll probably rally more, which would be an opposite correlation to stocks. If we look at the stock bond spread, you can see that it kind of is a short, just like the S&P 500. If you look at this bond S&P spread, it's a long, considering it just broke these levels around here. So I'm looking for a further recovery in bonds and possibly a contraction in stocks due to longer term economics, etc., etc. So we've looked at the tech sector, the financials, the bonds, and I want to look at oil. Now, I'm planning to buy oil on a hopeful recovery while the stock markets go down. Oil is probably going to recover just simply to put your money someplace, you know. And that oil, capital flows have to go somewhere, and part of it's going to go to oil and other places. And gold, I think despite what's happening in stock markets, gold's probably going to go down because even with different deflationary things, the dollar might recover, but gold's still likely, it might pop up with the dollar going up, but gold's likely to continue its downside movement considering this fairly important support. And we just might see a movement continuation to the downside. And finally, the last thing I want to look at is the Euro USD pair. I probably want to get long the Euro just because of some hope of recovery, blah blah blah. But it looks like the Euro is ready for a little bit of a continued rise on hopes and dreams. The U.S. is probably more likely to fall in domestic stuff, but I think the Euro still needs to correct. I think, though, we're still seeing a recovery in the Eurozone. Even though the Euro situation hasn't really improved, we still are due for a recovery, but we might also see a correction, even at the 118 level. And it's interesting here that the U.S. crisis affected the Euro more than the European crisis, so that's something interesting. So it might mean that the Euro's a little bit farther to fall. So anyway, this is my review. I hope you enjoyed it. Thank you for listening.